Hello, welcome to course number 2 and lesson number 3. We're going to review course number 1 in fairly medium detail because you guys need to have a really good grasp on it before we actually move on to lesson number 4 and start moving forward. So keep in mind that the goal for course number 2 is to learn about how to make pure profit, because the goal of the crypto market in general, or any market, is to profit, right? But we want to be smart about it. We want to have the psychology and the fundamentals entirely down. And I'm also going to be adding how to use Bitfinex and setting up Binance as well, because I've currently transferred over some funds over to Binance. Not really a lot. I only transferred $2,000 just so I can actually learn the user interface and get familiar with the volatility. Whenever you are transferring to a new exchange, always set up a formula for success. Just because you know how to trade on Bitfinex, for example, it doesn't mean that you're going to be entirely successful on a different exchange as well. Because just because you know all the abilities and all the moves of a video game and the theory of it, doesn't mean you'll actually be able to execute it once you're actually in the game, or in this case, on the exchange. So I'm going to take it very slow. I'm going to develop a method for me to actually scan Bitfinex and also Binance as well, since it's entirely different, since the volatility is much more. And of course, the user interface is something you want to get used to as well. So anyways, let's get into course number 3. But also don't forget, okay guys, that I need to be very firm that there are a lot of messages that come towards my way, and I try to do my best to answer YouTube, to try to answer on Twitter as well, and to also be answering on Udemy as well, which is almost impossible to make my rounds because I run out of time basically, right? So make sure that you guys are also considering purchasing the additional $200 support. And I personally think it's a great idea. So let me explain to you guys my perspective first of all. I have a normal amount of people, a huge amount of followers in terms of YouTube, Udemy, Twitter as well, where I just simply cannot answer every single person, and I try to make my rounds. And unfortunately, some people do get left out, and that makes me feel horrible. But it's not because I'm not trying to answer you guys. It's simply because I've just got too many people to actually provide support to. So make sure you guys are considering purchasing this $200 additional package that will provide you with 4 months of support, okay? And the 4 months of support will only be valid between November 1st, when you first purchase it, and February the 28th. So even if you purchased it in, for example, in December or in January, it would actually be only available still till February 28th. So that's 4 months of support where the people that do purchase this additional package for $200, every single person in that course for Udemy, for the additional one, will be able to ask me absolutely anything that they want that will pertain to course number 1 and 2. And basically, we're going to be having a lot of one-on-one sessions. I'll be replying to you guys by text and also by video format personally, not addressing only as a group, okay? And every single 2 weeks, what I will do as well is I will have a 2 hours, guys. That's right. Every 2 weeks, 2 hours, I'm going to sit down with whoever wants to join. And we're going to have a 2-hour session of pure Q&A, whatever you guys want. We're going to get the questions ahead of time, and we're going to focus on the important subjects that I think will really propel you to the next level. So is this $200 package actually worth it, you think, at the end, where you will get my undivided attention, which comes down to $50 a month? I'm basically not going to be trading at all, guys, for those 4 months, because my main goal will be dedicated to answering you guys. I've honestly made way more than enough money in the market already in terms of trading, right? But now I still have to value my time, and I still have to work, of course. So I really hope you guys understand why there's a small charge for this. But when you think about it, you got to invest in yourself, guys. I don't need to sell myself to you guys. You guys know exactly what I am capable of already in the market. And I've demonstrated day in, day out with consistent profits of anywhere between $20,000 to $40,000 of profit a month for the past year already. So I really hope you guys consider that. Anyways, moving on, let's do a review of course number 1. All right, let's get into, finally, into course number 3, where we're just going to quickly review course number 1. So we started off by learning about all the common terminologies that you guys should probably know about. And lesson 2 was one of my favorite ones, where we talk about what defines a good trader. Excuse me. We were talking about what separates a mediocre trader to one that's very good. And in my personal opinion, it comes down to being able to manage your emotions, making sure that you're always even and level-headed while trading. And despite how what's the word? How crazy, I guess is a good word that you guys might see me as. It's mainly just acting. Honestly, it's all just to entertain you guys in my videos, in my tweets as well. And I've got a very comedic and I guess outgoing type of personality. But when it comes to trading, I'm of course a very different person when I'm actually working. So in my personal opinion, it just downs to being able to psychologically manage your emotions and having very good risk management in general. And in lesson number 3, we ended up talking about dollar cost averaging. Dollar cost averaging refers to buying in specific intervals over time, over a period of say a week, or not a period of a week, but over say every week or every 2 weeks or every month, where you're just basically buying a specific amount that you believe is bullish and holding it long term. And then we were also talking about laddering as well, okay? Let me give you guys a very basic definition of laddering and how we can talk about or how we can plan in the future to ladder. So just as an example, let's say we have Elliott wave structures of 1, 2, 3, 4, 5 going upwards, right? So on the 4th one, what I generally assume is, first of all, never an extended 5th wave. I don't really believe that they happen too often, especially in the market right now. So if I believe that there's going to be some sort of 5th wave going up, I'll take my Fibonacci trend-based extension right here, and let's say this one hits a target of, we'll say 1618, or actually a little bit higher than wave 1 over here. Just to give you guys a very basic example, this one retraces down here. I'll assume right off the hop that this guy here could hit anywhere up to the 1618 level. So the moment that it starts to break above here, I would actually be interested in stacking up my shorts. So I might be buying my shorts around there and just stacking them up, right? And I'll be laddering them as they get higher up to add more to my position, because we can never officially catch the top or catch the bottom. Last thing we want to do is buy in one specific region only. It never works out, guys. I've honestly never been able to successfully buy exactly at the top or at the bottom. And if I did, it was just pure luck. So this is why I like to ladder my positions in a range when we're going up. And on the downtrend, it goes very similar as well, right? So on the downtrend, let's say we're getting a 5-wave structure coming down right here. As soon as I believe that there's going to be a 5th wave that's going to be broken down, I'll end up laddering my long positions as well. Just right over here, right? Just something like that. So I can buy in a specific range, since we can never actually catch the bottom or actually catch the top. And then for reading level 2 order book, so for example on Bitfinex, let's just go there and take a look at it together. So on Binance, just as an example right over here, you guys see that this is the order history right here, right? And then on Binance, we have the depth. So the depth refers to, I'm just gonna make it smaller so you guys can actually see it as well. Actually, I'll move my camera here just for now. So the depth refers to how many people are actually buying and selling right over here, right? So if we have a bigger side, a bigger amount of green orders on this side, it will generally devour the side on over here, right? So we can zoom in and out just to get an idea and a visual representation of how many people are buying and selling. And this is also a visual representation for the buy walls and the sell walls. On Bitfinex as an example, I'm not logged into my account, you guys did here anyways, we would be scrolling down to over here, and this right here you can zoom in and out. You would use this small button right here, okay, that will give you a visual representation. So the side with a bigger green amount will generally want to take over the side with a smaller amount over here. Think of it like a tidal wave. One side that's bigger will devour this other side that is generally smaller. And that's very important for us to learn how to read it. It's called the level 2 order book. And these over here are very important concepts that we'll eventually get into as well. So let's just go back to what we were talking about here. So we talked about what is longing and also what is shorting as well, right? So longing, you guys know exactly the concept of longing. You buy low, you sell high. Shorting, we'll go over it in much higher detail as well in another topic when we talk about shorting. So then level 6, we learned about what was the importance of reading charts and learning how to customize it as well. So you guys definitely need to learn how to customize here, and we're gonna go over that in the next video, or in lesson number 5, how to set up Binance and also how to customize Bitfinex and customize Binance, etc. as well. We're going to talk about how to short on Bitfinex, or just what is shorting in general. And shorting is a very important concept because you can actually make money on the way down. And then for course lesson number 7, which is generally talking about what are technical indicators. So we were going over RSI, we were going over MACD, and those are some incredibly important indicators that I use, combined with exponential moving averages 8, 13, 21, 55, and 200. And why do I use these as my moving averages? I use them simply because those are Fibonacci numbers. And technical indicators are basically a way of calculating it mathematically for us to give us moving average, for example, moving averages, right? It takes a specified amount of data or a sample over a period of time, it compiles it into a formula. RSI uses a very specific formula, and we can use it to gauge whether it is rolling upwards or downwards, right? And we were talking about how to read charts as well. And you guys should know a lot of the basic formations for charts as well, okay? So just generally speaking, very powerful. I'm just going to show you guys, some examples that we've learned about, right? Actually, you know what? Let's just go to Google and type in candlestick chart patterns, okay? We're just going to go over it very, very briefly so you guys can actually get a gauge of it, okay? So whatever chart we're taking a look at, for example, we're taking a look at this one here. We're going to be talking about bearishly engulfing candles, which you guys should know about, and bullishly engulfing candles as well. So a bearishly engulfing candle is where the body overtakes the previous one, and that's a very bearish sign. A bullish engulfing candle, for example, is one that's overtaking the previous candle that was red, right? So we have bearish tweezers, and then we have bullish tweezers, which are actually some of my favorite combinations of candles. If we got a green one and then a red one with 2 wicks up, that's actually a very bearish candle in my personal opinion. And then we have a bullish tweezer right here, right? Bullish tweezer is where we have a red one, and then we have a green one as well. And then we have 2 wicks that are rejecting to the downside. And then we got things such as spinning tops or spinning bottoms in general, right? If this is found on the very bottom with a medium-sized body, we can consider those bearish or bullish candles. So if it was, for example, red at the top, you definitely want to see this as a bearish spinning top, right? And then if you see a green one on the bottom, we're going to see this as a bullish spinning top as well, right? Hammers are generally very, very powerful candles. You see those on the downtrends with a long wick puncturing it, right? So think of a hammer that's actually dropping on your foot. What happens when a hammer drops on your foot? You're most likely to react and yank your foot up, and it goes upwards, right? And then the opposite of a bearish engulfing candle, the opposite of a hammer candle is when you're going on the uptrend, where you get a wick poking upwards, right? And we kind of call that like a shooting star as well. So make sure you guys are reviewing and you understand these concepts. Notice that I'm just glazing it over very quickly because there's absolutely no necessity for me to go over it. And time frames, guys. Time frames are incredibly important. And the way that I see time frames is I see it as zooming very far out so you can get a big macro picture of everything going on. And you also can zoom very, very close inside a smaller time frame candle. And this will give you a gauge of what's happening on a smaller picture. And it's up to us to go back and forth to all these different time frames to try to look for reasons for why it is bearish or why it is bullish. And once we actually understand these concepts of how to go back and forth to these particular time frames, we can find little clues that add up that make it lean towards one way or the other much more. And I love interpreting time frames. We have to know, guys, how to go back and forth. So for example, on a daily chart, okay? On a daily chart, if you see it as a green doji candle, right? Like just say a green hammer candle, throughout that day as well, in those particular time frames, you'll actually see a consistent uptrend as well, right? So think of it as like if you're, on the edge of the galaxy. I know it's a weird way to think of it, but if you're on the edge of the galaxy and you're looking at every single solar system, right? That would be like looking at it on the really big picture. You can't really see everything happening in the solar systems or on the planets. But as you zoom down to smaller time frames, you might be now standing in the solar system. And if you go to like a 5-minute chart, a 15-minute chart, you might be looking at it on a specific planet, right? So there's a way to look at it from a really big picture and a way to look at it on a small picture. And it is up to us to understand the importance of it so we can see all the detail that eventually add up to formulate a very big picture for us to see. Supports and resistances, very basic. Have you guys noticed? Now that we're actually going through we're summarizing a lot of these courses or these lessons, how basic they actually are. Now that you guys are advanced at a much more high level, pretty basic stuff, right? Supports, resistances. And when you actually compare it to things like what we're going to be talking about, which is level 2 in high detail, price action, momentum changes, Elliott wave theory, scalping, how to incorporate all of these more advanced strategies into one. Yeah, I think you guys are going to take a lot away from this. So keep in mind that this is reiterating a lot of the stuff you guys have learned, but on a more detailed level especially. And we're also trying to shape up your psychology so you guys can also have the mentality to be successful and to be a winner. Because trading is not only about learning how to trade, guys. It's far from it. You got to really throw that concept out the window of just thinking that, oh, if I know how to time perfect entries and exits, I'm going to be a good trader. It's not like that at all. You got to be psychologically ready, like I tell all my friends in real life as well, okay? And then lesson number 11, we talked about just common patterns, right? So some of my favorite patterns, just as an example, are ones like these ones right here, okay? Some of my favorite patterns are, for example, rising wedges, right? Rising bullish wedges. Because these patterns right here, once you actually identify them, you notice that they're, rising bullish wedges, also known as an ending fifth wave diagonal or leading first wave diagonal on the uptrend. So it'll make a consistent pattern, something like that perhaps, right? Something like this, and then it'll end up eventually breaking downwards. Yes, the third wave could be shorter than the first wave in these diagonals. We're going to go over that in high detail as well. And these ones tend to break down to the downside, right? So some basic patterns like that. We're talking as well about patterns like a descending triangle, right? Where they're more so bearish than bullish because we're getting a lot of tension from the bulls and the bears that are constantly fighting. The bulls are hoping to hold, or they're trying to hold it up at a specific price point, but the bears keep hammering them down lower and lower and they can't get any higher. That's generally what happens when it breaks downwards. And then of course the opposite applies as well for an ascending triangle. And this just super quick review, right, of what we're talking about. And then we're talking about the swing strategy as well. As you guys know, what I personally like to employ is a swing strategy on a higher time frame. If I were to swing it, right, these are really important concepts in terms of acknowledging that I'm using the 8, the 13, the 21, the 55, and the 200 moving average. And what we say to ourselves is, okay, well, if we're constantly bouncing, for example, right here would have been a really good time to enter a trade, believe it or not. As soon as we see it hovering, okay, above right here, okay, we're seeing it cross over, for example, right here. This is the first time that the white line in October 17 actually crossed over to the bottom side. Because it's on the bottom side right here, right, you would basically want to enter a long position right here. So this is the swing strategy. You enter a long position once you get a golden crossover. And the golden crossover is when the white 200 moving average ends up moving below the 55 moving average, the yellow line, right? And you have to be diligent, set a stop loss to allocate some time. You got to give it some time, guys, for it to move, right? And then you want to, you let it ride. You absolutely just let it ride. You don't have a specific target. at no target whatsoever quite yet, because you don't know how high this is going to go, and then you just keep riding it until perhaps the white line ends up going above the yellow line again. So for example, in this coin here, PHX, there's absolutely no point to be closing this specific position yet, because we just don't exactly know where it's going to be. We want to close it when this white line ends up moving above the yellow line. And this is a very, very powerful strategy in my personal opinion. Lesson number 13, guys. MACD, histogram. You guys know that I'm absolutely in love with these indicators, okay? So for example, right here, okay, if you guys were shorting on any exchange in general, the MACD is this right here. It takes an average of the past, I think 14, of the past 9, okay? Well, one is 12, one is 26, right? So the blue line is moving faster and the red line is moving slower. So the blue line takes the average of the past 12 samples only, and the red one takes the average of the past 26. So one's fast, one's slow. So a lot of professional traders, they'll use these as a signal to sell, right? So when it hits, for example, these points right here, or when they're going to anticipate it in advance, they'll use their histogram ticking down. So this histogram ticking down on the end of a major uptrend is their signal to basically get out of the trade as well, because this, if it keeps ticking down, it'll eventually meet this crossover as well. And you guys know how I absolutely love to see crossovers, right? So just as an example right here, okay? Just example right here, when we look at it on say an 8-minute time frame, on a very low time frame, okay? Right here, where we're seeing it consistently moving up, or actually not moving lower, right? Where it's going up, up, up. This goes down a little, but it goes up, up, up. That's also a signal right around here to enter a long position, right? So we see this right here as a signal where it's going upwards like that consistently. And right at the same spot right here, we actually see this right here spike up about 16%. So that was a very easy trade. So other than that, let's move on. RSI, the most powerful indicator. You guys know exactly how I feel about RSI. We can get a series, for example, this is my favorite one, right? We get a high, okay? And then we get a low, something like that. We get a low, whoops. We get a high on our side, then we get a low, just like that. But for price action, what we're seeing is, for example, this one is, you know, something like that, right? But this one's actually getting higher. It's still going higher. It's still going higher, still going higher, still going higher. And then there's a lull here somewhere. So we're getting a series of higher highs for price, but we're getting a series of a lower high for RSI. And that is a very strong and powerful reason to be shorting the market or to actually take profit in your position. And then we talked about Fibonacci, right? Fibonacci retracement, obtaining targets. So Fibonacci retracement, just to summarize very quickly for the people that don't know, is when we have a structure that, for example, moves upwards like that, right? And we would like to time an entry by taking a retracement level, and these are based off of the Fibonacci sequence of numbers. So the Fibonacci sequence of numbers, the golden ratio, and the best place to actually catch is about the 618 region. So we use Fibonacci retracement to perhaps buy right over here if we can. And then of course the next lesson, that was lesson number 16, we talked about Fibonacci extension and obtaining targets. So if that is your first wave coming down, I hope that you guys are being able to keep up with what I'm saying. I know there's a lot of information, right? So we would take, for example, if that's the first one, we assume that the wave 3 is always going to be greater than the first wave. And then we take this right here, right? And then we say to ourselves, all right, we're going to try to target somewhere right around up there that's greater than the wave 1 territory. And other than that, guys, that's a very quick summary of it, right? And you guys all know my lesson. I'm not going to go over lesson 17 because we're going to cover that in much more detail. And I'm going to share with you guys a lot of things that I haven't shared before. Okay, let's review the most important concepts that we've learned from course number 1, okay? So one of the most important strategies, in my opinion, is the breakout strategy in general, right? So what we noticed about Bitcoin was that Bitcoin started downtrending on December the 17th. And we'll take Ripple as a very firm example of what was going on, okay? So here it was very difficult for us to actually pinpoint this could have been a short-term top, right? But of course, right here, you would want, let's say you were playing it on a short time frame. One thing that I need to emphasize very highly is that when a coin, excuse me, is extremely volatile, what I personally do is I look at it on a very short and small time frame, okay? You look at it on a low time frame, because on a daily chart, and keep in mind that I'm trying to teach you guys my strategy. And with my strategy, it involves playing on lower time frames. So let's look at Ripple on a low time frame all the way back to over here, okay? Let's go all the way back. Let's go to way back. Let's go to like December. Go to December 15. Okay, so here we are. Here's December 15 ranges on a 4-hour time frame. Okay, so for example, here was a very obvious place to buy on a breakout. Okay, super obvious place to buy on a breakout. We're going to identify some key resistances to buy on a breakout. Okay, one place would have been, let's say that with this place right here, obviously, okay, because this one was established for a very long time already. Wouldn't you guys agree? Right around this range, at the 28-cent range, was a key region that was established as a resistance. Now we want to look for another place that's established as a resistance, generally speaking, right? Which would most likely be between this region right here, okay? This region right there was really indicative, in my opinion, that it was a resistance, right? We see this peak there. We see this peak there as well. Now we're gonna keep going until we see the volume start to pick up. Okay, we're starting to see definitely it hovering well above the 55 EMA. So we're gonna try to combine some strategies here from what we've learned in lesson number 1. And what we see is this is a major resistance, and the bigger resistance is right around that 28-cent range. But what we see is that it's tried to break below the 200 moving average, but we're getting massive support that bounced upwards, right? Not only that, here we see a rejection by the bears actually pushing it down with 2 wicks. But the bulls have clearly stepped in, and what you see is they pushed it up. Not only are they pushing it up, but the 55 EMA, there you go, right there, okay? The 55 EMA actually ended up supporting, okay? If you guys look very, very closely here, it ended up supporting for my swing trade strategy below all of these other ones. It ended up supporting below the 8, the 13, the 21, and the 55, right? And we have to remember that as a trader, our job is to have a really well-rounded set of skills. And if we have a well-rounded set of skills, we might use different methods of analysis to play our to take our positions, right, and to enter a trade. So this is the breakout strategy that I think is incredibly important. That's been helping me make a lot of money in the market so far. I don't play just based off of RSI, right? Okay, now we're gonna keep going, right? And we see, wow, it's actually trending really high up already. So this could have been an area where you would have added a small percentage of your principal, right, or of your balance. And we always got to remember, guys, never, ever, 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 once again, okay, play your entire balance. Always play a very small percentage of your balance. I recommend no more than even half. If you keep a $10,000 balance, make sure that you are only playing maybe only 5,000. And for each of that 5,000, you might only want to ladder 10, 20%. So here, I personally would have bought on the breakout, right? You buy it on the breakout right here because you confirm that, okay, well, the moving averages are actually definitely doing well. Or I would have even bought it above the breakout, say above this one right there. Then you add to your position, right? You add slowly to your position around here. And then, of course, as soon as it breaks above this resistance, bam, notice it's go time, guys? Watch, okay? Notice right here, as soon as it breaks this specific range, right here, right around there, okay? This candle tried to break above it, and it couldn't, and it got rejected down. But as soon as the trading range, which was actually higher than this candle's body high, this wick and that range, boom, that's go time, right? That's absolutely go time. And then people were very conservative, right? They were waiting to see if we would actually break this one right there. Notice this one that it poked through it a little bit, and a lot of people took profit because they didn't believe it was actually going to break this high. Ignore the RSI for these cases. You gotta ignore the RSI sometimes because it's all about playing on the breakout, right? And the breakout can push things to an astronomical high. So upon this breakout right here, you definitely would have wanted to add some to your position, right? Regardless of the RSI. And if you also take a look at the volume just trending up, right? Notice this one right here rejected once again. But as soon as we started trading higher than that range, right? Volume started to pick up a little bit, specifically on this one where the bulls were starting to get very interested in it. See that little spike there and that little spike there below my mouse? This one here definitely pushed it all the way up. So when it breaks out of the first resistance, that's exactly where you want to start adding to your position in this little range, right? Just start accumulating. You can do one of two things, right? You can be a team player and you can market execute and eat up the fees regardless of your exchange. So you can be a team player and show green across the board, or you can also put up limit orders to try to stack up the bids, right? So you can start driving up the market as well. And if you guys notice right here, this one was the one in particular, right? You see the volume very, very low, but as soon as you see people break above it, you see this wick that pushes it down. And the significance of that specific wick is that the weak hands, guys, were washed out, okay? Weak hands were washed out and they tried dumping, but you don't see it that clearly here. Now you see it, right? You see this wick right there, okay? Then the wick actually ended up rejecting. Bears tried to take profit or enter shorts, but the volume just started to pick up at the candle afterwards. But other than that, as soon as you see that wick reject, which means that we're rejecting this specific resistance right here. And because you're rejecting this specific resistance, bam, that is where you're just gonna market execute and you are going to buy, right? And then guys, this candle right here, honestly, on the 4-hour chart, if you were playing this time frame, you would have looked at it right here, okay? You would have looked at this RSI, and the key things when we're also talking about RSI, for example, that one and this point right there, okay? What we see is that right here, this one is a higher high, right? But what we see so clearly on the RSI, and this is one of the important lessons, okay? Here, this candle, I'm gonna enlarge it so you guys can see this. This candle right here is a fairly bearish candle with two wicks poking upwards, right? But we don't actually have, we have a high there and then we only have a low, right? In order for us to consider this a bearish divergence, we need to have a high, a low, and then a lower high, okay? A lower high, and the next one should absolutely 100% be the confirmation candle, okay? You don't want to short on this candle because there's no confirmation other than the candle yet. Not only that, the histogram is still ticking up very aggressively. You don't want to short it on this green candle either, this one right there where the arrow is, because it's a very bullish candle, right? But the next one that forms right here, okay? This one right here, after this one forms, okay, the previous one confirms that it's a lower high on the RSI, right? And because now we're getting a lower high on the RSI with this other bear spinning top, that would have been a very good time for you to take profit on a long time frame like this, right? And surely enough, if you look on the histogram, the next one after as well, okay, ended up becoming a bearish histogram tick down. And then if you keep actually going, right, let's say we wanted to play this on a very high time frame. Okay, let's say we ended up playing this on a very high time frame. For example, here, right, on the 4-hour chart still, you wouldn't have actually taken any profit. So if you don't have time to be day trading it like me, right, like me in terms of having a lot of time to day trade, whether you're a student, whether you've got a full-time job, etc., Well, what you got to make sure of is that you can actually swing this. So you would have entered it right on the breakout of pretty much this fanning out. That fanning out is where you would have entered it on the breakout. 100% certainty, you would have entered it right around there, and you would have closed it when it would have started to fall below the 55 EMA. You would have closed it right around the $2 profit range. And the reason why you would have closed it there is because it guarantees that you get to ride it to a much higher price point. Because you could have taken your profit there, you could have taken your profit there, you could have taken your profit there even, right? And there's no way you would have caught the top, right? You would have taken it way earlier, and there's no way you would have been able to ride it from a quarter all the way up to $2 or even $3. So this moving average strategy is super powerful in my opinion, and this is giving you guys a very good review of just breakout strategy in general, right? Now another one is of course a breakout right here, okay? For example, right here, let me show you. Breakout right around this specific range. That high, this range right there, right? As soon as you see a gigantic green candle like that with decent volume breaking out of it, okay? Take a look at it right here. Let's get a little bit closer, right? We see it break out of here, resistance, boom, pops out of it. This candle right here simply just could not stay above it, right? Simply couldn't stay above, or sorry, it couldn't stay below it. So it rejects to the downside, another rejection, and boom, this would have been the signal to go long on it, right? This would have been kind of an indecision candle, another indecision candle. But the moment that it breaks above these price points right there, that's a really good signal to go long. Another very clear example is this one right here, okay? We notice that the histogram is ticking up. It's got a very consistent uptrend, right? And because it has a very consistent uptrend, what we want to make note of is that there's a massive resistance right here, okay? The resistance in this candle right here pokes out of it, breaks out of it, and then the bears try to break it down below the resistance, but they simply could not hold it down. Bulls simply pushed them back up. We break past the resistance, the volume pops up there, right? And then now, what you're gonna look for is you're gonna say to yourself, okay, on this low, or that high rather, and this high right there, what we're noticing is you don't wanna take your profit there, right? Because you don't have another low to confirm yet, right? So now you have a low, but then now you have this one's a higher one than that one right there. So wait for one more candle to see how it's gonna form. Look for a low and try to look for a lower high, right? Makes sense? A lower high. There's no way you would have caught the exact top. You would have looked at this candle and you would have said to yourself on the 4-hour chart, that's a fairly bearish doji candle. Well, that's actually 4 hours, 8 hours, and then 12 hours right there. This right here is actually 12 entire hours of rejection to the upside. And you also see the histogram slowly waning off, right? So this one right there, the third candle that forms, what you see is the histogram tick down, right? And then you see a very bearish candle. And that, honestly, guys, probably should have been your signal to get out, right? You get the doji followed by this bearish candle and the histogram tick down. But if you guys wanted to see if there was one more wave up, what you would have done is you would have simply just waited to see you get a low and then you get one more high on the RSI. Not only that, these ones here, after it starts to downtrend, the RSI right there, you get a lower histogram and you also get a lower high on the RSI. So that's your signal. Get out of that trade. So I'm just trying to summarize very quickly for you guys some of the key things that we were talking about, okay? In lesson number 1, which is playing a breakout, very important. And I'm summarizing it fairly quickly for you guys. We're just reviewing some of the things. Now let's actually look at the one a little bit more. We've talked about that one a lot, guys. Let's talk about this particular uptrend right here, okay? Because it was so volatile and it ended up doing something like 300%. I don't know why this says 200%, right? Because if you actually take 25 cents to about 75 cents, well, that's not 200%, right? Think about it. That's actually 300%. Do the math. So I have no idea why it says only 200% over here. Am I just like weird for thinking that? So anyways, on a very low time frame, or sorry, on a very volatile coin, move over, guys. Move down to a low time frame. We're going to talk about Ripple on Bitfinex here, okay? Ripple is one of the ones that ended up uptrending a lot, right? Ended up uptrending a lot, and that was some massive volatility, right? So shorting it was incredibly difficult, I bet. Okay, so here's how you guys should have played it right here, okay? You would have acknowledged the resistance, first of all, right around these range, right? This is a massive resistance area, right? And we see it trending upwards. I actually caught a good portion of the short, but not the uptrend. So you would have noticed right here that this was making an ascending type of triangle, right? And clearly it actually ended up breaking downwards instead, which was actually kind of sad, but that's okay. Things like this happen. I'm not going to evaluate this from the perspective of Elliott wave whatsoever, okay? Definitely not Elliott wave because we're not really there yet. But if you guys are very curious about it, the impulse wave was, this was 1, I think this was 2, right? This was 3, 4, and you get a double top there. You get yourselves a simple A. This would have made a A, B, C, D, and E. Actually, A, B, probably actually this would have been B, and this would have been C. And I see the 5 waves right here, 1, 2, 3, 4, and 5 coming down to make ABC. And there you go. And not only that, when this broke down, what you would have done is you would have taken your Fibonacci range for Fibonacci retracement, and you would have tried to buy it somewhere between this range. That's the ideal range. Or you would have kept a very close eye between this specific range as well, right? But more importantly, if you did not buy it there on the breakout strategy, what you clearly want to do is keep an eye right there on the 28 3-cent range. And as soon as you see this completely decimate and just completely go up like that, that's where you go long, right? That's absolutely where you go long. And where would you have taken your first sign of profit or taken a little bit? If you're playing on a 30-minute chart, the moment that you see a high on the RSI, and then a low, and then another lower high. So right there is a lower high on the RSI, right? Lower high on the RSI. And then right here is you see a histogram ticking down. That's how usually I would have played it, right? So if you were going from an RR perspective, you would have entered it on the breakout right about here, set your stop loss slightly lower than here, you know, whatever you want to allocate around there. And I personally would have done this, okay? I would have done but I was in London at this time actually, if you guys remember, right? So I would have taken that here, and I would have done that for my Fibonacci target ranges, right? And I would have targeted roughly 1618 at 32 cents, or even the 1-to-1 at 30 cents. And that would have yielded a pretty good profit if you went for the 1-to-1, 5% profit. If you went for the 1618, 12.8% profit. You would have nailed it, right? So this was played on a very short time frame because it was so volatile. Now the next point, right, that you would have played it, you would have taken some of your profit here. You would have identified your resistance and your supports, right? You would have probably noticed this, first of all, this horizontal resistance right around there, right? That's the one that you would be making note of the most. And you could have also drawn it like that, right, as a a sloped one as well. So if you drew it as a sloped one, like that, you would have easily identified it, right? So there would have been a range for you to make note, right between this specific range to make note. And that's where, as soon as it breaks out of the first sloped one and the second one, that's where you go long on it, right? As soon as you see the volume start to spike up as well a little bit, definitely you want to go long on it. And then where would you have taken your profit? You would want to look for the next lower high, right? So here's where it is right here. Let's identify it. You would have identified it from a low and then a high. Always confirm and be consistent, because that is what I do. I wait for the low, and then I wait for a next high. And then I say to myself, all right, I would have definitely taken profit there, right? Just to be on the safe side, which would have been right around this range, right? Right there. I would have taken it no matter what, just to be safe. And we see that it didn't drop off much whatsoever, but then we just rinse and we repeat, and we keep doing the same thing, right? We say to ourselves, all right, well, that's the resistance right there. As soon as it breaks it, I'll do the exact same thing. That's what I'll do. And surely enough, we were able to successfully buy it on the breakout, and we can use a lot of different factors. In fact, here for me, I would have taken profit here because that's a really nasty candle, right? And then the next few candles, if it broke out of it, say this one right there, with volume picks up, right? Not there, but next candle, I definitely would have went long on it, right? And then I would have taken my profit on the histogram tick right here. There's a histogram down ticking. And also we got a very ugly hangman candle right there, right? And here as well, we set the resistance, right? We set different levels of resistances. One is right there, one is right there. We add a little bit on the first breakout of this resistance and add even more on the second resistance broken as well for the high. And how would you have almost identified the top here? You wouldn't have, guys. You would not have identified this top because it would have been pushed up really, really, really high, and you would have only identified it maybe on a 3-minute chart, maybe a 5-minute chart. So anyways, this was a very quick review. I hope that you guys have enjoyed this review. Maybe it refreshes some of your skills as well. So this officially concludes our lesson number 3. Which is actually awesome, guys. We reviewed course 1 very quickly. We talked about MACD, we talked about histogram, we talked about Fibonacci retracement. We incorporated everything in a fairly decent amount of time. So I hope you guys have had a lot of fun, and make sure you guys are also thinking about accessing that $200 package where you guys will get support for course number 1 and for number 2, where I'm basically going to sit there for 4 solid months answering all of your questions from November the 1st all the way till the end of February. I really do think it'll be worthwhile, and we can have a lot of one-on-one sessions as well, along with our 8 2-hour sessions of not one-on-one, but in a big group session where you guys can post lots of different Q&A that we'll take ahead of time and answer them and address you guys in a live stream. Have yourselves a great day, and thank you very much for joining me. I've had a lot of fun, and I look forward to seeing you guys for course number 4, where we're going to talk about setting realistic goals and understanding how compound interest works, which is a fancy way of basically saying how to grow an account. Right? I'd say it's a smaller account, and understanding that every time you win, you are able to play with a larger position size, which will eventually compound your gains to a much higher amount than you started with. So have yourselves a great day, and I look forward to seeing you guys for course number 4. Bye now.